We were anticipating results for Fidelity Bank, but they're not out just yet. What is the market expecting there? Because we've seen a slew of banking results in general.
Hi, Lerato. Thanks for having me. I think the market, based on our expectations anyway, we expect the bank to still underperform in terms of ROEs. We expect it to come out at about 7%. That's annualized ROEs of 7%. We expect to see some stronger loan growth from the name, and we also expect to see better NPL ratios as well. We expect the NPL ratio to come to the lower single digits. It was as high as 20% in 2010, but we expect it to come as low as about 10% based on half-year numbers. And we expect sales to AMCON to drive that to a large extent. But we're expecting results today, but it wasn't released, so hopefully we might see the numbers out tomorrow.
Let's just talk about the banks in general. I mean, most of the banks have shown some kind of improvements in their loan books, and we're seeing interest-related growth improving, but there are variations depending on the size of the bank. The Tier 1 banks seem to have done fairly well.
Yes, I agree with you, Lerato. The Tier 1 banks have really outperformed based on our expectations. ROEs have come out strongly. For First Bank, ROEs came out about 19%. For Zenith Bank, it came out at about 16.7%. So I would say based on ROEs, it's outperformed. Loan growth as well came out strong for UBA at 13%. And for First Bank, I think what I found quite interesting was the net interest margins was as strong as 8.2%. That was quite impressive. And also, interest expense shrunk significantly as well. And so I think we expect but I think what we found concerning was the market, the fact that the market didn't respond positively to that, and not just to First Bank results, but for the banking sector results as a whole, because broadly they've been better than expected from our end, and a few of them were in line, but I think broadly they were better than expected, but the market has been muted, and I think that's still a concern for us, which shows that the market is really not driven by fundamentals of the individual companies, but more of a macro and a global trend, really.
I mean, obviously, we are looking forward to the September deadline on the recapitalization of the rescued banks and the mergers and acquisitions in that space. How is this going to just change the look and the feel of financial services in Nigeria?
We're anticipating the September deadline, and I think my view is that there will obviously be a change. We expect a few banks to have been recapitalized at that point. We expect Intercontinental Bank to have merged with Access Bank, and we expect FCMB and FIN to have reached a consolidation as well, and Union Bank, we expect recapitalization of Union Bank. I think that should reduce the number of banks, but I won't expect the two entities to have merged at that point. That's for FIN Bank and FCMB, and for Access and Intercontinental. We think there might still be some time before the two banks merge, because also if you notice from the last MPC decision, there's been some extension I think that was a couple of weeks ago, there was an extension for deadline for banks that have reached the that have been able to sign TIA. So for FIN Bank and FCMB, Intercontinental and Access, and also for Union, extension bank guarantees till December. So I think it's clear that regulators as well expect some improvement in terms of consolidation, but also do not think that the banks would have fully merged at that point in time. So I think it's still till next year really before we see a reduction in the number of operating banks at this point.